Good morning, ladies and gentlemen. This is Butch Shorak. Options University is bringing you Market Forecast on Monday, April 29th, 2013. Welcome to Market Forecast. As always, remember that access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. So let's take a look at the week that was as we sit in this bullish market and we look at the Dow, the NASDAQ, the S&P, and the Russell 2000. Well, what do we see when we look at percent change for the week? All positive numbers, led up by the Russell at 2.5%. And then we see that the NASDAQ, which has been our laggard through the year, is up 2.3%. And we see S&P up 1.7%. And of course the Dow, which has been the strongest of all our markets, been leading the markets up, was up 1.1% for last week. Year to date, everything's in double figures except for the NASDAQ, sitting at 8.6%. And of course, the market leader for the year is the Dow, up at 12%, and 10% plus out of both the S&P and the Russell. Rounds out what we could say has been one heck of a beginning to 2013. Exactly what kind of feelings do we have in the market at this particular point? Well, things certainly are conflicted. If we look at the psychology of the market, we see that everybody seems to be quite bullish on the market, and nobody's expecting more than just a mild correction. But we see that a little thing like a false tweet causing billions of dollars are removed from the market in just a matter of minutes. So I wouldn't be afraid to have my safeguards in place for my portfolio at this time and to set up my stops so that I've maintained some of the money that's been made so far this year. Fundamentally, the market's mixed. We see solid improving trends in labor and housing markets, but even those are beginning to show a little bit of fatigue as we move into the next quarter and what would tend to be, if we look historically, the weakest 6 months of the market moves. We had a decline in the labor pool with our last announcements out of the labor pool, and we see that things have been good, but it's difficult for the market to pull back when we see the Fed pumping in $85 billion a week. So monetary, very little has changed in the last 5 years as the Fed has been printing money and keeps everything at full throttle. Technically, we're very near resistance as we're near market highs. We're looking for that Dow 15,000. Seasonally, however, we're looking at a market that tends to be bearish, and you've heard that old saying millions and millions of times, sell in May and go away. However, I want some more confliction to take place. Many times in an election year, after the election has taken place, May ends up being one of the good months for the year. So difficult to say where we're going. We know that it's looking a little toppy, but that doesn't mean that it's over yet. The trend is your friend until it ends, and so far that trend is just up. Taking a look at the S&P, we see that that's definitely looking like an uptrend. However, in the last few weeks, we certainly have been going sideways, getting albeit a few higher highs, and again looking for a higher high, looking at this chart for the SPX. Notice that our sideways trend looks much like this, and there's our basic trading range, and inching up a little bit higher each time we go up. There's a high, and will we see another high coming out of this? And it's just a matter of time before this market does get tired. However, you remember the old rule, do not fight the Fed. Looking at the last week, we can see that we certainly had a nice move out of the market in the last week as the cycle was up. We have not reached that previous high, which we had in the middle of April, but it seems to be headed that way as we had a nice move up in the market, went from single-digit gains right on up into double-digit gains for the week. I mean for the year, and certainly nice gains for the week as the SPX, and let's take a look at the Dow, which didn't have the same kind of, well, it doesn't look all that much different as we see it in an upcycle, again, not reaching those previous highs which we got in the middle of April. The NASDAQ, which was our big leader for last week, let's take a look at that, and we see that it had certainly a nice move up as we continue with its up cycle, but we see that on Friday we got a lower high and a lower low, indicating that we may have another pullback in this sideways trend, and maybe end up with a lower high here as we didn't quite reach that level again with some of our economic announcements, and of course sitting at 1 month into the new earnings cycle. Looking at the Russell 2000, we see that it also is not getting higher highs, and we seem to have a resistant line that runs like that. But as far as the week, certainly nice gains on the week as we saw the Russell move up with the overall market. What kind of fear is in the market? Well, let's look at our trusty old VIX to see what we find out about the fear in the market. And here we are sitting at 13 and not very high, which is our normal range, somewhere between 11.5 and usually around 15 is our typical. We did have a spike up in the last couple of weeks, just like we had one back there in February, and that's when we get our little pullbacks that make the markets run even more real, as we expect those things as the market gives us the ebb and flow that is characteristic of normal markets. Looking at the bond market, what do we get out of that? Well, Friday we got a nice move up as we saw that a little bit of a pullback on Friday afternoon, and there could certainly be some movement into bonds as we see the overall market getting poised for that May pullback. Will it happen? I don't know, but be aware that many times you can give back much of what you made during the first quarter and the first 4 months of the year if you do not protect your equities positions as we go into the worst 6 months of the market beginning around May 1st. Still 2 trading days left in April. Let's take a look at the financials, see what the banks are doing and what the financial markets are doing. Looking at XLF, which is our Spider Select ETF, we see that it reached all-time our new highs. Not all-time highs, but certainly new highs for the last 6 months as we saw it kind of peak above the previous high, with the banks certainly showing a nice return and looking better as they've cut costs and done the things necessary to make these banks profitable. And of course we have that great federal aid going to our banking industry, which has helped these banks look a little bit better as we move forward. Looking at oil, we see that oil, after dipping way down around the 15th of April on tax day, we see that it's had a nice little steady climb, but we're definitely not anywhere near previous highs for the year with oil, as we see oil pulling back a little bit, and it was actually represented in the pumps as we saw some more reasonable prices. At least we now call them reasonable prices at $3.50 a gallon. Wasn't that way 4 years ago, but here we are. It's today. Looking at gold, the safe haven, we saw we had a huge pullback in gold, and we saw a huge sell-off, and we see it now crawling back up, attempting to close that gap, which it's very close to doing, as we see gold nowhere near that $1,800 an ounce level that it was at previously. Looking at the SPY, what kind of volume did we have in the last week? Did we have any big volume days? Well, let's take a look, and we see basically no big volume surges in the S&P or the Spider, the ETF for the S&P, as we pulled into this what amounts to being the last week in the month of April. Still 2 trading days left with the 29th and the 30th. We'll see whether we get some window dressing as we close out this month, and also have this month of earnings where a lot of the important earnings are already already over with the first month done. And with that thought, for those of you that are gold members, stick around and we'll look at our stocks to watch. And for those of you that are not gold members, please feel free to go to Options University for some more free videos. Go to www.optionsuniversity.com/free gold. This is Butch Shorak, Options University, Market Forecast, Monday, April 29th, 2013. Thank you so much for being here.